Brock VandenBerg with TaliMar Financial, your trust deed investment broker and mortgage fund advisor. I'm excited to announce October 2021 was another successful month for TaliMar Financial and our investor base. Let's get to the numbers. In October, we funded 9 loans totaling $6.19 million, which is nearly double what we funded in volume last year at this time. Our average loan size increased from $489,000 to $688,000, but the average trust deed investor yield dropped to 7.07%. Please don't confuse that yield, though, with our mortgage fund, which remained steady at 7.6%. 3 of the 9 loans were fix and flip loans, 2 were bridge loans, and the remaining loans were 30-year rental loans. The average loan to value was 63.5%, and 8 of the 9 loans were first trust deeds. To date, we have funded 92 loans totaling over $58 million. We're on track to fund another 20 loans before year end and should close the year at or above $70 million in total loans funded. This compares with 2020, where we funded 93 loans totaling $46.5 million. So let's dive into the existing loan portfolio. Currently, we service 84 loans in our portfolio, totaling over $46.8 million. We did have some significant payoffs at the end of last month, so our entire portfolio dropped by 8 loans and is currently outstanding by roughly $46.5 million. The average loan-to-value ratio of our portfolio is 64.32% and pays a net 7.85% yield to the lenders. Our portfolio currently consists of roughly 55% bridge loans and 45% fix and flip loans. We currently have no loans that are 30 days late and no maturity defaults. The one maturity default that we had in the portfolio last month was paid off in late October. We remain very aggressive in the servicing of our loan portfolio. I'm excited to announce that the mortgage fund continues to grow. We have raised over $6 million to date, which is an increase of over $1 million from the prior month. We currently have 18 loans in the mortgage fund, which totals $6.725 million. Our goal is to reach $9 million by the end of the year. Please note, we are limiting new capital into the fund to $9 million through the remainder of the year so that we can ensure that we can place all new investor capital and continue to service our existing portfolio. If you're interested in placing capital in the fund and you are either waiting for an existing loan to pay off or you haven't completed your subscription paperwork, please let us know so that we can reserve an allotment in the fund before year end. Also, the fund is limited to 25% self-directed IRA investor capital. We are at roughly 15% self-directed IRA investor capital now and have room for roughly another $658,000. Let us know if you'd like to invest any self-directed IRA capital into the fund, and we would be more than happy to work with your custodian to process the paperwork. If you don't have a self-directed IRA and would like to open one, we would be more than happy to introduce you to our preferred IRA custodian. Let's talk the mortgage fund. The fund returned an annualized yield of 7.6% last month and has yielded an average monthly return of 7.53% since its inception earlier this year. This compares with an average yield of our current individual trust deed offerings of roughly 7%. As a quick reminder, we have waived the 12-month lockup period on the fund and waived any profit participation through April 2022. That means that all income earned by the fund after expenses will be paid to the investors. One of the common questions that we receive from investors is, what is the process to invest additional capital after my original investment? This typically arises after an investor already invested in the mortgage fund and is paid out of an existing trust deed. In other cases, investors who originally started out with a smaller amount have decided to increase their allocation to the fund. Well, the process is simple. Simply reach out to our investor relations team and they will send you an updated subscription agreement with a new balance. Once you've signed the subscription agreement, we will approve the higher allocation and send the wiring instructions. The process typically takes less than a day. If you're interested to increase your allocation, please let us know. I'd like to highlight an example of a loan that we funded last month. In this scenario, our borrower requested a short-term cash-out refinance of an existing investment property that they had owned. The value of the property was roughly $1.2 million, and they were seeking a loan amount of $450,000. The hurdle on the original request was that they were seeking a second trust deed because they had a low rate but low balance first trust deed. After explaining to them that the cost of a second would be much higher than simply paying off the existing first trust deed and funding a new first, they decided to go ahead and pay off that first and allow us to record a larger first trust deed. The final loan amount was $597,000 at approximately 50% loan to value. One other hurdle on the transaction was that they needed the funds for less than 3 months. And for many trusted investors, that would not have been an attractive investment. By funding the loan in the mortgage fund, we simply replaced a recently paid off loan. And once this loan pays off, replace it again to ensure that we have a steady stream of income. This is one of the biggest benefits of the mortgage fund, is if one loan pays off, not only do you have other loans that are still earning interest, but it's much more efficient to replace loans in the portfolio when a loan pays off. The use of leverage in the fund can also minimize what is called cash drag on the fund. Cash drag is when a loan pays off, but there isn't a replacement loan, so those funds remain in the fund account and not earn interest. By using a line of credit, you can draw from the line of credit to close on a new loan and pay down the line of credit when a loan pays off or new investor capital is brought in. The end result is it reduces uninvested dollars in the fund. Okay, where is the housing market headed? I spent the last couple of days reviewing the October 2021 market report from the California Association of Realtors. In general, the housing market remains extremely strong. The median sales price of an existing single-family home increased by 12% from this time last year to $798,000, though sales did decline by over 10%. This could be attributed to the lack of homes for sale and some buyer fatigue. The Inland Empire experienced the biggest jump, with prices increasing over 18% from the prior year. I think the biggest takeaway from the numbers this month is that the market appears to be normalizing. It's way too early to say it's a trend, but I think it's safe to assume that home values can't appreciate 10% per year for any substantial period of time before you've priced out most buyers. What keeps me up at night? Well, interest rates. Though I've been saying interest rates are bound to increase for the last couple of years, and I admit I've been wrong thus far, it seems impossible that rates aren't going to be increasing in the near future. Inflation is hitting everybody's pocketbook right now, and I think most people are recognizing that if you release this much liquidity into the market, prices are bound to go up. My concern is how much and how quickly do interest rates increase before inflation calms down. I don't have an answer to it, but I'm interested to hear your viewpoint on this subject. Many of you probably read the news that Zillow exited the home buyer market. As many of you know, Zillow is an online marketplace for home buyers to view homes for sale. Zillow makes the majority of its revenue from charging real estate agents to advertise on their site. 2 years ago, Zillow decided to take all that data that they had aggregated and develop an algorithm to buy, rehab, and sell homes. Using the algorithm, they felt they could buy and sell homes more efficiently than investors with boots on the ground. Long story short, it didn't go well. They announced earlier this month that they had exited the market due to taking heavy losses on the majority of homes that they had purchased. In fact, I had several real estate investors sell them homes, and they had mentioned that they were sold way over market. Here's my takeaway about Zillow. It is very difficult to use an algorithm to buy and sell real estate because of the human element. You can't simply write code around human behavior, at least at the moment, and correctly consider all the outcomes. Further, it's impossible to know each market and each subsequent market. They're constantly changing daily and monthly. This is why the real estate agent is so important in any one transaction. A good agent will understand the market and the forces driving that transaction. It's the human element that a good agent has mastered. But the positive news on Zillow is that they didn't make up a statistically significant portion of any market, so we shouldn't see any major disruption in general transaction volume or pricing. With that, I'm going to conclude our update. If you have not invested with TaliMar Financial and are looking to get more information on our trust deed investment platform or mortgage fund platform, please reach out to me or my team. We've made the process of setting up a lender account with TaliMar Financial very easy. By establishing a lender account, you can view and invest in our trust deed offerings and view the loans in our mortgage fund. Simply visit our website at TaliMarFinancial.com and select the drop-down menu. Simply visit our website at TaliMarFinancial.com and select Investing. Select Trust Deed Investing and select Lender Account Setup Application. Here you can complete the application. It should take less than 5 minutes. Once completed, we'll go ahead and approve your account so that you can view our trust deed offerings. You'll also have the option of calling in our office and speaking to one of our friendly account specialists to set up your account. For active investors that are set up on our platform but have not logged into our lender portal, please take a moment to visit our website and select Trust Deed Investing and select Trust Deed Portal. From there, log in and you can view all your active trust deeds and then also view and subscribe to our available trust deeds. If you currently invested in the mortgage fund, don't forget that you can view all the loans in the fund and their status through the lender portal. And congratulations, mortgage fund investors, on your 7.6% annualized yield this month. I want to thank you again for all the support you have shown me and our staff. The transition from the trust deed platform to the mortgage fund platform has been exciting, but has also been a learning lesson for all of us. As we identify areas of improvement, from onboarding new investors to educating our investor base on its benefits, we will be sure to roll them out to you. We know a lot of investors still have questions about the fund. Please don't hesitate to reach out to me or our investor team with your questions. If you're watching this monthly update on YouTube, please select like and subscribe to our channel. We post a lot of interesting content on this channel, including industry news pertaining to the lending industry, updates on TaliMar Financial, and the before and after videos of projects that we have funded. Thanks again for listening and have a great day.